Hello, everybody. Welcome to Weekly Market News. Today is Monday, first day of March, and we are beginning the new week with many question marks about the last week performance of stock markets and also on bond markets, as we were able to see some quite steep sell-off on technological stocks as well as some value stocks, which were mostly under the radar. Where investors were moving their capital, especially from technological stocks, which are at the moment overvalued, very expensive. The PE ratio was incredibly high. To value stocks, cyclical stocks, stocks that might take advantage of this rapid vaccination process and everything that is going on in the economy and in the stock market. So let's look at the S&P 500, Nasdaq. Basically, let's start with Nasdaq, which experienced last week one of the steepest sell-offs on Thursday. You can see that on the daily chart. Biggest decline since I believe since month of October. And overall, the week and the month of February was very negative for the markets overall, not just the technological markets. If we are going to look quite a little bit more detailed into the reasons and the reasons why this happened and why maybe we should be concerned to the next week, fundamentally nothing has changed much. As we only thing that we saw last week and was maybe the main concern for the markets was rising yields from U.S. treasuries. They on 10 years note it topped 1.6%. You can see the steep rise from 1.2 to 1.3 to 1.6 last week. Right now, like I said, we are experiencing maybe a little bit more calm beginning of the new week as the yields are declining a little bit. But if you look at the 5-day time frame, you can see that the decline has not really began to be quite big. If we look especially at the pace of rising the yields, that's really what should be concerning, because especially technological stocks are highly dependent on low borrowing rates in the economy, and especially the treasury yields from U.S. treasuries are making the way for another yields in the economy and another rates. So that's why this is mainly concerning for the technological stocks. But you can see the overall sentiment was more or less the same. On S&P 500, Dow Jones, which was one of the best performers last week, also closed a little bit lower. You can see S&P 500 and the sentiment wasn't that good, and you can see Dow Jones, which contain more of the value and cyclical stocks, was able to close a little bit higher for certain days, even topped the new record high. But you can see that the negative sentiment took over even in those markets. So very interesting weeks for stocks, which not sure if the decline and the sell-off might continue in the week that we have ahead. There's many question marks. Like I said, the treasury yields are gonna be the main factor, the main catalyst for the upcoming days. I believe that even the yield as it is right now, about 1.4%, the number around 1.5% is extremely tricky, because if you can see S&P 500 dividend yields, let's look. What is the dividend yield right now? I think it's about you can see 1.57%. So when you took this into perspective, and you have stock markets that are on record highs, you have you have bond markets in sell-off, you have economy that is recovering. You want to put the money somewhere where it's safe and also provides some yield. So, and you know stocks are risky and they can sell off anytime. The correction can come and the valuation can drop. And so that is the signal for some investors to move their money back into the bond market from the stock market. So everything is about the perspective. Right now, you can see the market is mostly doing okay, I would say, at the beginning of the week. European markets were not under as heavy pressure as stock markets in US. I would especially look closely at, for example, VIX index, which can show us how is the volatility, but also where is the fear from the investors. You can see today, it hasn't opened yet, so we will see, but pre-market shows that we declined from 28 to about 25, so it's looking good so far. It's looking good, but we'll see. We'll see how this thing will play out. But like I said, overall sentiment is can shift pretty rapidly. I think it's more or less negative, but there is some signs on the bond market that it's extremely oversold at the levels that it is right now, and every other rise in yields can be a signal for another bond markets to jump into the market and push the yields a little bit lower. So everything is about the yields. Everything is about inflation expectations. They are extremely high at the moment. So we'll see how the market will react to that. Let's look at the Forex. Very interesting couple of sessions last week, as on EURUSD we were able to top levels above 122. You can even see it from technical analysis. Very interesting head and shoulders pattern here, which broke the neckline around 121.80, broke it, but the fundamentally stronger demand for US dollar pushed the rate below not just 121, but below also this rising trend line, which gives us indication that the market can go even lower at the moment. I froze here, so no need to see me. The market can go even lower, can go to 121. We will look for another. Let's look at the lower time frames. If you can look for some support area where the market can possibly stop, and you can see that the area, the closest one that we are testing right now, and if you go even lower, you can see here is a very interesting area of accumulation before the market was able to rise. So 119.73 is a very interesting area of support for the market. So we will see if we go even lower, test these levels, or we will be able to close about 121 today on Monday, which will be a strong buy indication for the market. GBPUSD and other currency pairs against US dollar were under pressure last week, especially at the end of the last week. But more or less, they were able to shake it off. You can see GBP is holding quite strong at the beginning of this week, whereas US dollar is under heavy pressure. Obviously, the sentiment and the fundamentally, it makes a lot more sense to trade a GBP and hold British pound as the vaccination process, and everything is going extremely fast. Everything is going very, very good for GBP and the UK economy. So the expectations are much higher than in other European economies. So for the inflation, as we are going to talk about inflation, economic expectation, rebound economic expectations, everything is much better in UK, and that is the reason why GBP should stay positive. And even though the correction made a lot of sense here, and if technically and maybe even fundamentally, the uptrend should stay with the market, and we should see GBP to go even further, and perhaps, I'm not sure if within this week, but within the next 2 weeks we can see a test of the high levels around the level 141, maybe 142. 142 would be interesting. You know, we were able to stop here. There was some resistance, and we will see if the market will go above, maybe test this level and create maybe something similar to the beginning of this year. You can see the January we couldn't break this level 137.48, and we were able to push through it in about 3 weeks time. So GBP extremely positive. Like I said, let's move to commodities. Very interesting couple of sessions, even for oil WTI and even for the Brent, but fundamentally more or less the same story. Even for oil WTI as well as Brent, as the supply is disrupted and the demand is recovering quite quicker than we expected, which puts the market into the supply, I would say demand shock right now, but even supply shock, as the Texas winter disrupted supply and production of oil in some key areas in Texas, but those areas should be restored and production should be restored at the moment. So everything, the supply should be going to the market, but overall you can see the demand recovering quicker and quicker, which gives the market some outlook for maybe better prices, better demand. And even for OPEC, which meets, I believe, on the 4th of March, and will probably decide the future of production policy for another month, where Russia already said they want to pump more oil, and Saudi Arabia probably will want to pump more oil as well. So the price should stabilize around $60 a barrel. And I believe no more steep rises are going to take place here, as the winter is mostly over, and market should focus on different things at the moment. So that's about oil. And gold was also very interesting last week, as we were talking about. This is 4-hour time frame. Last week we talked about this interesting level of resistance, where we were able to bounce from there, test the level 1760, which is the lowest level since I believe June. And we broke through this level Friday, extremely negative, test this level again, 7060, and going down. So gold is remaining negative for the most part, and I believe we can see some more declines here. At the moment, maybe the sell-off was a bit too steep, so some consolidation and move sideways is maybe the best case scenario for this chart at the moment. We'll see how this will play out, but I believe I don't believe the bounce from here to higher levels is very possible. But we have 1795, very interesting level of accumulation and supply zone for the market. But at the moment, I believe the market will go sideways. Let's look at the economic calendar for this week. What do we have ahead of us from a macroeconomic standpoint? Manufacturing data, ASM, PMIs from US on Monday, on Tuesday, a bunch of secondary data from Europe, but we have interest rate decision from Australian Central Bank, unemployment from Eurozone, GDP, Canadian GDP, GDP from Australia, then a bunch of data from China, PMIs from Eurozone, then ADP employment change from US, as well as service and PMI data from USA. On Thursday, retail sales in US, jobless claims, obviously. Powell will have its speech on a Thursday, and on Friday, the most interesting data this week, NFPs from US, employment data from USA, not from Canada at the same time, but we have IBPMI, so this will be as well interesting. So this will be it for today's video. Hope you guys enjoyed. If you have any questions, I'll leave them down in the comment section below the video, and I will see you next week.